Hello, friends of Pirate Chain. It's me, Giuliano, and it's the 4th of June. Yes, can you believe it? Well, today we're going to talk about our BTC price charts, and we'll take a look also our USDT price chart. We'll consider a few things. We're trying to understand what's happening here, what type of pattern is playing out. And I'm here showing you this our BTC price chart. Ignore all these fancy words and colors over here. Let's just one last time milk this cow. Yes, I'm going to get rid of these and we're going to move on. We indeed found quite a bull in Pirate Chain. And now we're trying to figure out, what are we finding? This is our BTC price chart on the daily time frame with the line chart. I'm going to clean it up a little bit right now. So here we have this support zone around 11,000. I'm going to get rid of it because we've got this confluence of the yellow 20-day moving average and this bluish gray 21-day EMA right here. You see that? Okay. So it confluences, so we'll get rid of it for now. Because if it's going to come back and hit support, it'll probably be in confluence with these lines. So I'm not worried about that other horizontal line anymore. It was more of a medium short-term line. I will keep our boxes here though. Now, for those of you who are curious where this yellow box came from, it's literally this price action right here creates, see how the price was coming down, but instead of going straight through there, it stopped there. And then it went up a bit, but it couldn't go past that. And then it came down and it broke through. So this stopping point and this resistance point here are at least some sort of price action to consider where, okay, because what are these supports and resistances anyway? Supports and resistances are areas of significant price activity where there is a turning eventually, okay? And that becomes a resistance. Even if it's a temporary stopping and the price action fiddles there for time, that shows that at that level, there is resistance. And alternatively, on the downside, it would be support. Okay. So that's where we get this yellow thin zone, and it's interestingly going to confluence around the touch point of this potential expanding triangle, which is the main idea of today's video, is really the question of, is this a big expanding triangle right here, or is it more along the lines of this box here, from this horizontal rectangle, where it will be more of a sideways flat move? And I remember that I had mentioned that on a more monthly time frame that it could be in this, but I'm pretty sure that box actually went up to this roughly 16,000 Satoshi level. So anyway, anywhere between here could be flat, but it looks like based on the daily chart so far, our resistance is around 15,000 in closing, and 15,000 Satoshis in closing. This is a line chart with closing prices of a daily time frame. So what does that mean? Well, this box could be our significant zone of up. We just went up, now down, and then back up, and back down, until that cleans out, which to me would mean that it's probably a complex pattern with X waves in between to make it synchronize. For example, you might have this zigzag here, which would be A, B, C. And then you would have, let's say, an X wave, let's say connecting the zigzag with the next part, an X wave, and then we would get, let's say, a flat A, B, C, okay? And then maybe this forms some sort of X wave. And then we get an A, B, C, right? Maybe we get like two flats, or maybe we're getting a flat and some sort of wave here that will then bring maybe a zigzag or even a triangle, whatever, okay? That kind of idea where things are combining with X waves, and it looks like it's more of a flat movement in that sense for us. And it might even start to contract and narrow if it becomes a contracting triangle. The other opportunity here, though, is the expanding triangle, which seems to be showing up. So what am I going to do here for us? I'm going to, because this orange line confluences roughly with the green box bottom, and because we're not near there yet, I'm going to rid ourselves of that for now. Now you can see, I'm going to even make our purple lines. Let's make them, yeah, orange. Good. Good. We need a little bit of orange in our life. And there you are. So this is where we're thinking here. With a okay, so now this is a bit about triangles and then about expanding triangles. So firstly, about triangles. Triangles usually are contracting, or at least we tend to see them as contracting. And basically the price action kind of touches it and touches it and touches it and touches it. So some people don't really care so much about, you know, the details, and some people do. And one person that does is Glenn Neely of the Neely method. So hello, friends of Neely method and Neo Wave and Elliott Wave in general. Elliottians, I would say, in general, are more concerned about touch points and certain data relationships and all that. So that's the idea, okay? That would be basically what a triangle is. It's the compression. When it's a contracting triangle, which is what we normally tend to see, it's a compression of the price action, and then a move, a thrust, it's called, a thrust in whichever direction is the exiting direction. Okay. So, and then there are certain rules and ideas relating to that. And yeah, so where are we now? So one thing that made me think we're in an expanding triangle, well, we have this zigzag looking structure right here that we pointed out. And then we started making this kind of price activity. And wow, the high was here. Then we made a low, which was lower than this low. So we had a low, a high, a lower low, then a higher high. And now, then a lower low. And now we are wondering, is this actually an expanding triangle? In which case, this would be expected to reach a touch point. Now, here's the question though. Is it an expanding triangle? We don't know. And one thing that started to catch my eye was, let's say you go into a 2-day chart. Well, in fact, this low is higher than this low. So we start to get a different structure. However, knowing from the 1-week chart that you can have different relationships because of different closings, because we're using the line chart, so that changes the data a bit. So just keeping that in mind. But on the daily chart, we do have this clean information, roughly. It even offers opportunities for ideas like a truncated zigzag right here. So that's one and then, but then, so what's difficult right now for me is understanding what's going on here, and is it going to bring us to the promised land up there? And that's okay. Part of this is we're learning together. I'm learning about this. And the part of the reason why I wanted to do these videos too is because it allows me to consolidate my learning and actually accelerate it and that sort of idea. So here we are together. Thank you for being here. Once again, thanks for liking the videos and sharing them. Of course, all the comments are great. And to those of you who have purchased yourself some pirate attire, well, good on you. Thank you for representing. All right, now let's move along here. You can watch previous videos that I made in the recent days to see about like how and why we might think about these types of levels. If we look at our candlesticks, we already, we have gone here, but then we have other candles. We have with a wick, right? We went there. So that means with other candlesticks, we would have to do different things, right? Why are we gonna choose some and not others? Is it a line of best fit? That kind of stuff. Okay, if it is a line of best fit, we've got body, I'm good with that. And we've got a touch here, fine, whatever. But I haven't been using it that way, and therefore I'm not going to use it that way. I want a closing touch. And that would then, because that would be so precise and clean. And I feel like that suits me better, especially because, you know what, we having a general idea. A lot of this is also after the fact. This whole triangle thing, we won't even really know until after the fact. So what's the idea then? Well, what it is we're trying to rule out possibilities so that we can rule out we can rule in opportunities. So rule out possibilities, ruling in the opportunities. And so right now, the two biggest opportunities are we're at a bit of a local top and we're going down, and maybe even all the way down to 10,000 Satoshis, but I'm doubtful of that. I'm more likely as a support on the roughly 12,000 Satoshi level here at these EMA, SMA of the 20 and 21. Yes. So, and then, so that was one option, right? The other option being making our move, maybe a small consolidation here. Yeah, maybe even down to this level and then up to the orange line. But I don't think if we're consolidating here, I don't think we're getting here. Sorry, that arrow didn't point where I wanted to. If we're consolidating here, I don't think we're going to make it down to the moving averages down here. I think they will meet us higher up, and maybe that will be, let's say, at the end of the weekend. So what I'm seeing now is a little slowdown and pause. We had a good strong 3 days really. It was a holiday Monday, let's say, so to speak, although crypto 24/7. And that holiday Monday, so then it's like Tuesday, Wednesday, Thursday, we're booming days here, good days. And then, oops, right here, there's these up thrusts. And then we're having, let's say, Friday, Saturday, Sunday consolidation. And then next week, let's look for a higher move up. I mean, that's my bias right now, actually. So I could even see us dipping down in the weekend all the way down to, let's say, a 12,000 level. And when we look on shorter term timeframes to confirm these ideas, we see, yes, that's happening. And these bands are actually at the 13,000 level. So we might just play around 13,000, although, it doesn't mean we can't from here break down and come back up. But that's a few days right there. So same thing here. We don't want to be spending too much time here, although we could get all the way June 7 down here, touching the Ichimoku cloud and bouncing off of it and going higher. Now, question being, this is what we're going to be watching as well. So on your 4-hour charts, set up your Ichimoku clouds. Generally, if you're a friend of Ichimoku and you like to use it, I'm using the 20, 60, 120, and 30. And if you want to look at that, you can check previous earlier videos. But anyway, there you see it there. Okay. Yeah, so that's where we are. So you just watch it. And if it's breaking down, especially here, we've got this Kumo twist. So that's an opportunity for things to break down. If it does break down, then our first thesis of sideways through this channel up and down in this green box, biggest rectangle channel. Okay. But still, like I said, bias is upside to the yellow and eventually orange touch line. Okay. On the daily, we're talking here. Talking on the daily. All right, beautiful. Okay, now, so let's imagine it is this. Let's imagine it is these orange trend lines here, signaling some form of expanding triangle structure. Now, none of this is advice because as you can probably already tell, this is quite amateur. I'm not very thorough with these things, but in fact, I feel like I've been thorough enough. And I think that my ideas have been pretty decent so far. And it has been based on the same line of thinking, same principles of thinking. So I'm going to continue this. But one thing I did want to say too, is that that the market psychology of crypto is way different than the market psychology of traditional stock markets and such, and other type of markets, legacy markets, let's call them. And so it's going to develop different, like the patterns seem to be the same, zigzags, flats, triangles, whatever, right? Impulsions up and down. However, so impulsions and corrections, basically, of the same shapes that we witness in the other psychologically driven markets, right? But they're different. And so maybe some of the Fibonacci relationships, they don't play out. Maybe they're more magnified. Maybe instead of something that would normally be a certain Fibonacci relationship, in crypto, it could be doubled or tripled, possibly. Anyway, that's one idea that I'm thinking, is that they're similar but different. And so you can find the same things, but the rules might not always be exactly the same. However, I do trust in Glenn Neely and the friends of NeoWave that these ideas and principles apply to all markets that are human-made, and therefore crypto should be an excellent market for that. And therefore, I do think that a lot of this is valid, if not all of it. Anyway, to be determined. Okay, so let's think about triangles. So what should we look at first? Expanding triangles, because we showed before that you can have contracting triangles. Speaking about expanding and contracting, my friends, talk about expanding and contracting. Okay, so we're going to grab this. Maybe you're watching this on 1.5x speed or 1.75x speed. So let's clean this up a bit. Oops. Actually, forget about it. Focus on the words right now. Okay, expanding triangles. So the A wave or the B wave are going to be the smallest segment. Okay, and we're going to see that this is going to be a horizontal expanding triangle if it is. Therefore, the A wave will be the smallest segment. And we can see that. Now, okay, before we go there, question being, so anybody who knows, let me know, comments below. Can you go from one pattern, like a zigzag, directly to another, like an expanding triangle, without an intervening X wave? My guess is yes. Otherwise, that would mean that an X wave has to be in between every single pattern. And I don't think that that's the case. So now, I'm going to just lay out this. This is an ABC. It should really be an ABCDE. And here that is. Good thing I've considered that before. So let's go with U, and we'll go. So this is where A starts. This would be, oops, A, we can fix that out. B, C, D. And this is our potential E touch point. And I'm looking at, oops, 8th is seems a little soon, but it could be 8th or 9th of June. That's about the Tuesday or Wednesday. I can imagine it'll be rip roaring and then maybe settle down, but maybe not. So let's just be conservative here and say about 10th of June. That would be the Thursday. Okay. Awesome. So that's the general idea. Let me know what you think. A wave or B wave, in this case, A wave will have to be the smallest. It looks like it is. Good. Wave E is almost always the largest wave. And in this case, it is, let's say, in time already would take, if it is what it is, it would take at least, it has taken so far 12 bars, and the previous C wave, which should be the next biggest, or which is next, is 10 bars. Okay, and then the B wave together is 15, so that would be 5 bars for the B wave, or the C wave, sorry. The D wave, I should mean, sorry, the D wave is what's counted here, and that is the 10 bars. And so the C wave is with 15, that would make 5 bars. And then the B wave actually with 15 is 8 bars. Interesting. Okay. Nevertheless, already the E wave is the longest in time, okay, by 1 bar, and it's not even complete. The other thing is in price, and we can already see just visually that if it were to go from D to anywhere around here, that would be the highest amount of price movement in any direction, whether down or up. Okay, so that's cool. It can't occur in B waves of zigzags. So one of the earlier thoughts that we were having here before this movement, like even here, still wondering that maybe this overall was going to be a complex multi-wave zigzag where you're getting a zigzag here, you get some sort of flat here, and then a zigzag all the way down. But that didn't happen, okay? And so because it was just such a close move here, yeah, you know what? You could call it a truncated zigzag. That's the other option. However, I don't, let's just make sure, oops, would the C wave have gone more than 32%, which it didn't. So it didn't even really technically fit. What I just did didn't really technically fit as, oops, as even a truncated zigzag. So, all right, that's where we are right now. So we're thinking here, since this didn't play out as some form of zigzag, now we're into the next idea, and that is of the expanding triangle. So that's just basically what I wanted to mention when I said here about the zigzag. So B wave is usually the most time-consuming and complex segment. So far, it looks like that. This B wave was somewhat complex too, I guess, but this one looks like it has the time and the complexity. And here we're not even, we don't know what type of complexity it will take to get. If we touch, like we have to touch. If this is expanding triangle, we're going to touch. If it doesn't touch, it's not expanding triangle. All right. The E wave will almost always break beyond the A to C wave. So here's the AC line, trend line, which means that this E wave would supposed to be breaking beyond it. However, remember then, after the E wave is done, there is going to be a retracement. Okay, that is, but it won't retrace all of the E wave. So that'll be interesting. So we'll get there next. Okay, so here we are. The B to D trend line is the base. That's the base. If it were inverted and this were our expanding triangle, this B to D trend line would still be considered the base because it's relative to the A, B, C, D, E. Okay. All right. Now, it must be said, expanding triangles are extremely rare, generally. That's at least what has been written by Neely. He hasn't seen a lot of them. So, friends of Neely, send this over to him and tell him to write a comment telling me how I'm wrong, please. Because I'm not saying I'm right, I'm just saying help me understand why this is not an expanding triangle. I mean, we'll know at least if it touches. And even if it touches, it might not technically be an expanding triangle, right? But I think we're going to be pretty close to getting to call it that. All right, now the thrust out of the expanding triangle should be less than the widest wave. So once we do thrust out of this triangle, okay, if it does make its way and it goes up, wow, look at that, eh? That would be interesting confluence. It would be great if we could do that and then come back and retrace. That would be awesome. Woo. So yeah, so that means it would break through. However, there's probably more nuance to it than that. All right. Now, 3 of the 4 waves of A to D have to be at least 50% of the next wave to the right. So that is the case, meaning that the wave can't be too small compared to the next one. So is this half, so is 0 to A, is it half of A to B? Yeah. Is B to C half of C to D? Yes. Therefore, 1, 2, 3, 4 of them are already 50%. So 3 of them have to be. So not even all of them have to be. So if this A wave was tiny, but the B was 50% of the C, and the C was 50% of the D, yeah. So hold on. 3 of the 4 waves A to D. So this is not, this is, and this is. So that's 3 of them. Yeah. Confusing my own self. All right, goodbye for you now. Go away. Thank you very much. You've been very useful. Here's some other ideas. So this is basically from the Neely method. And I encourage you, if you're interested in this kind of thinking, definitely take a look at it. All right, or just stick around and see what comes up for us as we use the pirate chain price charts to learn ourselves something real good. Wave A or B will be the shortest. True. You see wave A, shortest. Wave E tends to be longer in price and time. We already talked about that. The Fibonacci relationships between waves is lacking compared to contracting triangles. So you remember a contracting triangle was a triangle that looks like that, and the price is going in it this way and moving this way, right? Okay, so this is an expanding triangle, and the Fibonacci relationships are lacking. All right, and that can be instructive because if you do some work and you find a lot of Fibonacci relationships, then maybe you're saying, okay, well, too many Fibonacci relationships here, can't really make this a triangle. So if you want me to go through that, we can. I'm not going to do that in this video. The pattern after the triangle should not completely retrace the E wave, meaning, yay, if we have a pattern after this, well, this whole E wave will not be retraced. So that's good to know. That could tell us very instructively that we've hit a very nice bottom of this correction down at the 9,600 Satoshi level, 10,000 Satoshi level. Hooray, awesome. And yes, then we have ideas like a limiting versus non-limiting triangles. Now, this is more important for contracting triangles. It's not as important for expanding triangles, okay? But what it is saying is that if you want to distinguish limiting and non-limiting triangles, you take, because the A wave, and the B wave are separated. In fact, you don't have to touch both points of the A wave. It's really, where does the A wave touch at its completion? Where does the B wave touch at its completion? Okay, and so what that means is, though, here is that you're taking the extension of that. I'm just drawing it roughly. Okay, we can basically imagine in our mind, because it's, if it has to be more precise, we'll make it more precise. But basically, it's saying here that the apex has to be before. So if you were to take 20% of all of this triangle time, so you measure the whole triangle time, and you take 20% of that and add it here before, okay, it's called, or it becomes limiting triangle if the apex, this point here, is before the 20%. If it's after the 20%, so within the 20%, then it will be considered a non-limiting triangle and will have slightly different behavior, but mainly there's not really a big difference. Okay, so let's find out. We take our time box. Let's imagine, firstly, let's just take it from where it is now, just to even say already, can we rule out, is it limiting or not limiting? If it becomes an expanding triangle, we'll have a better idea. So from where we are now to the beginning of the A wave is 36 bars. Okay, 36 bars. So 10% of that is 3.6 bars. Therefore, 20% of that would be about 7 to 8 bars. Okay, let's do 7 to 8 bars from here. 6, 7, 8. Here's 8. So generally, even if this poorly drawn apex like you can even see that this is actually more narrow. It probably would come out over here somewhere. Okay, so we are definitely, the apex is before the 20%. Therefore, if this becomes an expanding triangle eventually, or if it is playing out an expanding triangle currently, then we'll consider this a limiting triangle. Not that it really matters. Okay, yeah. All right. Well, I mean, it does, but not as much as of a contracting triangle is what I mean. Contracting triangle, the limiting and non-limiting matters more. I can't wait for us to take a look at contracting triangles. Come on, Pirate Chain, give us a contracting triangle soon. All right. Maybe we'll have to search for it on lower time frames. Fun with charts. Hey, I hope you're enjoying all this price chart action. Friends of price charts. Okay. Now, we are moving towards our completion here. We're looking here that waves A and E relate by 1.618. That is a Fibonacci relationship. And what we'll do for that is take a Fib extension tool, which allows you to measure any price distance and then go to the beginning of any other price distance and measure that. So let's say we're going to be measuring the D to E price difference in relation, which is wave E, in relation to the 0 to A wave. So first we're going to choose 0 to A because E has to be 1.618 of it. So 0 to A is roughly there. We come down to the beginning of E, which is the end of D. Boom. So already we are seeing now this 1.618 relationship. Already we are seeing this 1.618 relationship. Okay. But we will, and so that's what made me think, uh-oh, maybe this isn't, like another evidence that maybe it's not. However, here's the thing. Here's the thing. That's when I thought, well, you know what, crypto markets are different too. What if the psyche is a little bit different here, that the volatility is different? Since it's more sharp, since it's more volatile in price and time, then that would mean maybe the rules are slightly different. I don't know. So that was kind of where that thinking came. However, what will be interesting to see when we look over here is that, okay, so there are different kinds of expanding triangles. Okay? There are irregular expanding triangles, which have some specific things about them, which change their shape. They're not as symmetrical, let's say, as this horizontal, it's called expanding triangle. Then there's running expanding triangles, which are more of a trend-based. So they move in a specific trend. So either up or down, it will look like. And then you have horizontal, which are the least common, which are basically the A wave is the smallest and every wave is bigger, so that it makes an outward, expansion. All right, so wave A is the smallest segment, got it. Each wave is slightly larger than the previous, got it. The E wave is the most violent, complex, and time-consuming pattern of the group. Well, I do believe that this is pretty violent, and I think if we're getting here, we're going to get some more violence. There is a degree of complexity that will form if we get a couple of corrections like that. Maybe we see, some more sharp volatility. Then there you go. And in terms of time consumption, we've shown that for it to complete, it will have taken quite some time compared to the others. All right. Then here's that idea. Wave E relates to wave A by 1.618. However, look at what I found then. Oh, here's the other thing. in the non-limiting expanding triangles, in fact, it wasn't a 1.618, it is a 2.618 relationship. So that's actually why I thought maybe at first it's actually non-limiting. But then when we did the apex test, where we tested the apex and the time, it turned out it's limiting, and that gave me the 1.618. So I thought, okay, well, here's another argument for why it's not an expanding triangle. But now we see that if it's really explosive, it might relate by 2.618. Okay, then drum roll, please. Let's take the A. No, that is not the money printer. Money printer sounds like this. Okay. I bet that's kind of like what it sounded like. Nowadays, it just sounds like this. Tick, 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 tick. That's somebody typing on a keyboard and pressing enter. Okay. Or maybe it just sounds like this. Click, click, click. It's a few mouse clicks. All right. So let's see, what did we get here? Whoa, what is this? It's a 2.618. Wow, that would be fun. Now, pirates, do not let me down. I want to see this. Let's get there. Come on, pirates. Huh. This would be glorious. I think I would literally, I don't know. I can't stop laughing. Okay, anyway, so I'm going to leave it there. This is kind of what we're thinking right now. Wow. But I'm going to give one more argument why this could be, investigated further for its, could be investigated further for its trueness of expanding triangle action. And that would be, oy mama, this is not working. There you go. That would be this idea. A triangle is made up of 5 segments. It's called A, B, C, D, and E. And yeah, I mean, if ever there was a need for a sponsor, Elliott Wave, Sesame Street, you need to get together. Okay. Yeah, so, but the idea is, is that within the A, which within each wave, so within the A, within the B, within the C, within the D, and within the E are A, B, C patterns. So that becomes something to consider. Is this an ABC? Is this an ABC? Is this an ABC? Is this an ABC? And is this an ABC? Possibly. Just because, let me just clean this up for us as I talk and end this out, okay? Thanks for bearing with me. I hope this is bringing you some value, some points of education, some food for thought, maybe something to help you fall asleep to and get your much needed rest, whatever it be. Okay. Oh, I'm about to grab an arrow and that's not going to work. So see this mono wave here, which was making our A wave? Is just one point to the next point without any complexity, any stop anywhere. It's really literally just a simple mono wave. So then, well, how could we say that there's 3? Well, even a mono wave can be considered a 3. So just because it's a mono wave like this, literally, doesn't mean it's not comprised of a 3. Also, just because there are more than 3 waves like this, doesn't mean it's not a 3. The main points could form the required 3. So those are some of the ideas to consider. And then within them would be other more complexity that is compacted into the basic structure, which would make the ABCDE of 3, 3, 3, 3, 3. Okay. So that's one other thing that I'm struggling with here is finding the 3. This just doesn't work as a zigzag. To complete the zigzag all the way up here and have the A wave only be this, that doesn't seem to work. So maybe there's something more complex going and the A wave is actually up here and the B wave will be down here at our whatever retracement point, okay, in the next whatever day 2, 3, and then our move higher is going to be our C. That would be the 3 to complete. Anyway, some food for thought. I hope you're doing well, staying hydrated, moving around, enjoying your relationships, enjoying your life, or working through whatever shit you need to work through to enjoy it better than you are currently. Love, peace, happiness. Oh, but before we end, I just want to show us where we've been and where we came. So we even did touch that yellow box. So anybody who's been paying attention and doing a little bit of short-term trading, I hope you've been successful based on some of these ideas that have been shared in all of these videos. All right, this has been a long one for all you friends of longer videos. You're welcome. All of you enemies of longer videos who are still watching, well, bless your heart, bless your soul. All right. That's it for now. We are sitting at a $5.21 pirate ARRR-USDT. I'll just show this to you for the friends of the ARRR-USDT charts. We're using getaurox platform, by the way, and if you're interested in trying it out, it's free, and you can check out the link in the description below. So here we are with this sucker. Maybe I'll do a little bit of looking at the dollar price chart and and talk about it more, but we're finding support at the bottom of this box that we had drawn out. You can search previous videos to find out why I did that. Hopefully I did it in a video and not at some other time. And then we've got this 20-day moving average here, about $4.50, which can provide some support. Okay, let's hope. All right then, but even stronger if we're staying at our support about $5 at the bottom of this horizontal box. All right, friends of price charts and all things good, bad, and ugly, and of course, beautiful. Until next time, goodbye.